My name is Allison Carabin, and I work for Jewish Residential Services. Um, I'm not sure how familiar you all are with Jewish Residential Services. We're a small nonprofit agency that serves adults with psychiatric, intellectual, and developmental disabilities. We're based in Squirrel Hill in Pittsburgh, but we serve people beyond the Squirrel Hill neighborhood. We have a few programs that are really interesting. We have the Sally and Howard Levin Clubhouse, which is a psychiatric rehab day program. We have a supportive living program, which provides supportive services for adults with intellectual or developmental disabilities who live in the community. We have the Families in Transition program that I work on, which works with 2 community living arrangements that we run with Berland, and educational programs and advocacy are part of that program as well. There's also the Jewish Singles Social Network. You don't have to be Jewish, single, or social. You just have to want to network. And I'm really excited to have you all here and to have Kelly Davis from the Pennsylvania Treasury Department office. Just a couple of housekeeping things. There is closed captioning, so if you would like the subtitles, if you click on the More button at the bottom of your screen, you can find a thing that says View Subtitle. Also, we are recording this, so if you don't catch everything, we can send you a recording afterwards, and you can certainly view it again. If you don't want to be seen, you can turn your camera off. That's perfectly fine. But I do ask that everyone keep their mute on just so we can hear well. We're going to have questions and answers at the end. A bunch of people sent in questions in advance. Thank you so much. That was really helpful to know what's on people's minds. Kelly has reviewed them. I think a lot of them will be covered in her presentation, but if you still have a question at the end, I'm going to ask you to type it in the chat, and we'll get to it. This is the second of a series of 3 programs. The next program is on June 2nd, and it's a little bit later in the afternoon at 5:30, and it's going to be with Heather Conroy from Evolve Coaching. And she's going to be talking about Evolve Coaching and some other resources for people with autism. So I hope you will join us for that as well. Okay. Kelly Davis is a field representative for the Pennsylvania Treasury Bureau of Savings Program, which include the Pennsylvania 529 College and Career Savings Program and Educational Savings Program, the Pennsylvania ABLE Savings Program, you're all here to hear about, which is a savings program for people with disabilities and their families, and the Keystone Scholars Program, which provides children born or adopted to Pennsylvania residents a $100 grant to use for future higher education expenses. As a field representative, she travels across the Commonwealth, virtually, I guess now, but to promote these programs to different businesses, advocacy groups, schools, organizations, and government entities to help them understand the importance of saving for a loved one's future with Treasury programs. Mrs. Davis graduated from Kutztown University with a bachelor's in communications and a minor in public relations. Shortly after graduation, she began working with the Pennsylvania Treasury Department and has been there since 2005. So I'm going to turn it over to Kelly. Yes.
All right. Well, thank you so much, Allison. Thank you, everyone, for spending time here with me this evening. I know evenings are always hard, especially in the springtime. So I'm going to go ahead and just move forward. My name, again, is Kelly Davis, and I'm a field representative here. And we're going to be talking, of course, about the ABLE program. So just wanted to kind of reiterate what Allison just said. We're all in listen only mode, and to ask your questions, just type those into the chat and we'll get to those at the end of the presentation. So this is the agenda for today. We'll discuss what ABLE is, who is eligible, how to open and manage an account, some additional details and considerations before making up your mind if an ABLE account is good for you, and including a few extra rules for individuals receiving SSI. So that's really the agenda and what we're going to go ahead and get started. So let's jump right into it. I have a lot to go over. It's a lot of information. So it's great that they are recording it and it will be available to everybody. So first question, what is ABLE? ABLE Accounts is a savings and investment product for people with disabilities to use for qualified disability-related expenses. One of the most significant features of ABLE accounts is that funds in the account are not counted when determining eligibility for federal means tested benefits. There is some limitations to SSI, which again, we'll discuss and get to that those limitations, I guess you could say. So through ABLE, for the first time, individuals with disabilities can save for more secure future and have the ability to control their own funds. Also, it gets them a lot of great federal and savings tax advantages. So ABLE stands for Achieving a Better Life Experience. ABLE was signed into federal law by President Obama in 2014, and that allowed all the states to create their own programs. So Pennsylvania ABLE Savings Program was passed by the House and Senate and signed into law by Governor Wolf in 2016. PA ABLE went live. We actually brought it to everybody April 2017. So our program now is about 3.5 years old, and it's one of the fastest growing in the country. We have more than 5,000 account owners who have saved more than $53 million in assets. So we actually have a consortium, a group of different states that work with the ABLE program, and we are the top. We own about 50% of all the assets within that consortium of 14 states. So again, Pennsylvania is doing extremely well with this, and there's a lot of people that are signed up. So with an ABLE account, you can save while maintaining your benefits. The federal law says that assets in an ABLE account and qualified withdrawals from the account are not counted in any federal means tested benefits, with that limitation for SSI. PA ABLE assets are not counted against state needs-based benefits having to do with disability, health, and student financial aid. It's extremely important because without ABLE, it's very limited to how much an individual with disabilities could save and still receive those government benefits. So for example, a traditional recipient of SSI could only save about $2,000 in their assets without jeopardizing their benefits. Now you can save an additional $100,000 in an ABLE account. So you can have your $2,000 in regular savings and then $100,000 in your ABLE account, which of course, $100,000 is going to make a huge difference. This gets the person with the disability the ability to save for a car, a house, or just everyday living expenses. If you go above that $100,000 threshold, the SSI benefits will be suspended, but they will not be terminated. So you kind of have to pay down and spend down. Medical assistance will continue through that time though. ABLE account owners who don't receive SSI can save more than $500,000 in their account. So an individual can have one ABLE account nationwide. While you may see information from other states, Pennsylvania's ABLE law has several PA-specific benefits, which you can see here. These are only available to Pennsylvanians if they use the Pennsylvania ABLE program. So we want to point out that some states' ABLE programs use confusing advertisement and marketing initiatives that may mislead you to believe that you're opening or that you're involved with the Pennsylvania ABLE program. So if you open one of those non-PA accounts, you're missing out on those critical disability and tax benefits available for Pennsylvania residents. So always look for the logo that you see on the right-hand side there, the PA ABLE logo, and make sure that you visit paable.gov to receive the correct information for that.
Kelly, you're not sharing your screen.
Can you see it now? Okay. Let me see. No.
I actually cannot.
Can you see it now?
I can see it fine.
Okay. All right, good. Okay, so contributions to an ABLE account are eligible for state and federal benefits. Let me do one thing real quick here to try to make this a little bit easier. Okay, there we go. Sorry about that. Thank you for your patience. All right, so contributions to a PA ABLE can be deducted from state-only benefit or state-only income of up to $15,000 per person per year. Those only contributions to a Pennsylvania ABLE account qualify for the income state tax deduction. Account owners 18 years of age or older may also be eligible for a federal credit of up to $2,000 for contributions into their ABLE account if they are not full-time students and they have not claimed as a dependent under another person's return. Also, there is no state or federal income tax on PA ABLE account earnings while funds are in the account or when they're withdrawn for used for qualified disability expenses. And we'll go over what those expenses are, don't worry. And in state court proceedings, accounts are not subject to attachment of levy by creditors of the eligible individual or the contributor. So I'll touch on all of these a little bit more in depth later in the presentation, but I just want to kind of mention them now so that you are aware. ABLE accounts with a balance of over $100,000 will impact your SSI benefits. ABLE account assets are not subject to Medicaid repayment to the Department of Human Services as long as the account owner is still living. After that person passes away and their assets become part of their estate, the state can make a claim under certain circumstances. These rules are the same whether or not the person has an ABLE account or not. So people aren't penalized for having an ABLE account at all. It's just after somebody passes, then they tend to utilize and try to come gather money from the estate, potentially. Contributions made as a gift.
I just have a quick question. When you say account owner, is that let's say the child that it's set up for?
So the account owner's it's the individual with the disability.
Okay, thank you. I just needed that clarification so I could follow along better.
Yes, no problem. I'm sorry if that wasn't clear. All right, so contributions are made as gifts to eligible individuals and should be made directly to the ABLE account. So you don't want to give somebody a check for their birthday and then have them deposit it. You can put that money directly into the ABLE account. Under normal SSI rules, gifts can impact the eligibility. So if somebody gives the SSI recipient money for groceries or puts the money in a personal checking account, that money could actually affect the SSI benefit. So that's why you don't want to do that and just put it directly into the ABLE account. With ABLE, anyone can contribute to the account. So a gift into ABLE does not impact their benefits at all. But the gift has to be made directly from the giver to the ABLE account. So we're going to look at who is eligible to have an ABLE account. There's two really big aspects that go into the eligibility. The first one is controversial because it is the onset of the disability had to be prior to age 26. Now, we know that 26 is extremely young. That was just done to be passed in order to get it passed and to be available. There is legislation out there. I know Senator Casey is a big component of this, and they're trying to increase that up to age 46. So that has been introduced, and I believe they should be voting on it shortly. But of course, that always gets pushed back and whatnot. So we're hoping by the end of the year that this does in fact go through, and then it does increase to age 26. So just kind of an example. So even though the onset of the disability must occur before the individual's 26th birthday, it doesn't matter what age the person receives the correct diagnosis or what age they are now, as long as they can prove they had the disability before their 26th birthday. If an individual is eligible to receive SSI or SSDI, then they qualify for an ABLE account. They do not have to be receiving the benefit, simply eligible to receive it. And the last option, which we list here as 2B, is that people who do not have enough work history for SSDI and the people that do not qualify for SSI, they can self-certify. So in addition to the onset being the age of 26 with self-certification, the person must have a written disability-related diagnosis from a physician who meets Social Security Administration criteria, saying that the person has a physical or mental impairment that results in a marked and severe functional limitation and is expected to last for 12 consecutive months or result in death. That's like the technical terms. So in this process, there is a checkbox to indicate that you are self-certifying your requirements and that you meet those. We do not need the doctor's note when enrolling. It's simply something that you wouldn't want to hold on for your records in case that is asked upon. We will not ask for that. The IRS could potentially ask for that, but it's very, very limited to how many people in our experience have received that request, but we still like to say in the best process or in the best field, you would want to do that. So you just need to keep that for your records. And if asked, then you could go ahead and provide that for anyone that asks. Most people find the easiest way to open an account is to do it directly online, especially now with everything going on. We've all gotten pretty used to enrolling and doing everything virtually. So if you just go to our website, paable.gov, and you click on enroll, it should take about 15 minutes to complete. We also give you the option here in Pennsylvania to complete this via a paper application. Maybe you want to mull it over, kind of look at it, make sure you're filling it out right. I have heard of people, you fill out the paper form to make sure you do it right, then go ahead and enter that information online, whatever's easiest and works best for you. If you want a paper form, you can request that from our customer service line, or which you can see here, 855-529-ABLE or 2253, or you can always print that off directly from our website. So there's some unique features for account control. If the person with the disability is 18 years of age or older and has the legal capacity to contract, the federal law requires them to open the account for themselves. Now, if the person with the disability is younger than 18 or lacks the legal capacity to contract, then someone else can open that account for them. Even though this person with the disability remains the account owner, this person then is the authorized individual. So it's typically a fiduciary and must administer the account for the benefit of the account owner. So this includes representative payees to open accounts as well. Federal regulations limit who can be authorized individuals to the parent, guardian, or a person with the power of attorney. It also allows representative payees to open accounts on behalf of an individual with a disability. And I'll show you exactly how to, at the end, we'll walk through and show you exactly how to apply online and what those pages look like for you. So after the account is opened, you can fill out the form and add an authorized agent to manage the account if you wished. There are 4 different levels of control, so you have options on how much control you give them. As you can see here, they range from ability to obtain information all the way up to level 4, which grants full control of the account, which along with the account owner. So it's up to the account owner whether they want someone to have authorization and be an authorized agent and how much control they give that person. So now we're going to talk about how you can contribute to the ABLE program. There's many ways to make contributions: paper, check, or money orders, electric fund transfers. There's a lot of flexibility with this. An account owner can put money in occasionally or have it regularly drafted, say from a paycheck or existing bank account. Out of sight, out of mind, get the continuous contributions going there. If you receive SSI or SSDI monthly benefits, you can directly have those set to go into your PA ABLE account with direct deposit. You note that you cannot direct deposit your SSI or SSDI benefit payment if you have a representative payee. So for more information, we advise you to go to the Social Security Administration.gov website, and that's ssa.gov. We ask that each contribution be at least $25. The federal law limits the amount that can be contributed annually to $15,000, and this is from all sources. So no matter how many people contribute, anyone can contribute to the account. It just cannot exceed $15,000. If it does, they'll simply return that check or return that money to you. They just need to provide information identifying the account with their contribution. So family and friends can also contribute through YouGift, which is a great option. It's a free online service, and it allows the Able account a unique code that you can share with whomever you want to be able to make those contributions. Another way to contribute is that you can roll over your 529 if you have one, which is a college savings account, into an Able account. That would count towards your $15,000 annual limit. So if you have a large 529 plan, you can only transfer $15,000 each year. And contributions to an Able account are considered complete gifts to the account owner. So again, that money would go directly to the account owner and they're in charge of that money. Now, we all love the government stimuluses that came this year. So these stimulus payments that occurred during COVID-19 pandemic can be deposited into Able accounts. The stimulus payments must be either spent or deposited into an Able account within 12 months. Otherwise, these funds will be counted as assets and could reduce your benefits. So I just kind of want to reiterate that. They must be either spent or deposited within 12 months. We also have unemployment payments that are big right now, including the extra $600 per week because of COVID-19. These are counted as unearned income for the SSI. So that doesn't have a big impact. By saving your stimulus payment and or your unemployment funds, they will not count as assets in the future and will not count towards your SSI, will not count towards a $2,000 limit that you typically have. So this would go into the Able account. Now we have the Able to Work Act, which was added shortly thereafter the Able account was created. And this adds some wonderful flexibility for some account owners who are working, allowing to contribute more than that limit of $15,000. Account owners who have not made a contribution to either a defined contribution plan, such as a 401k, an annuity contract, or a deferred compensation plan during the tax year can contribute the amount above the annual Able contribution limit. So the amount of the compensation or the federal poverty level of the prior year, which in 2020, that was $12,760. So the most that could be contributed if you have an individual working would be $27,760. And again, they must meet that criteria of they cannot make contributions into a defined compensation plan, annuity contract, or deferred compensation, and then they'd be able to use that. Any contributions above that $15,000 would be made by the account owner. If so, then that money would simply be returned to them. So if all of us on this webinar today contributed to Joe's Able account, once we reach 15,000 threshold, then Joe is the only one who can contribute above that level for the rest of the calendar year if he is working. And it only meets that criteria. Once the new year begins, and it's calendar year, then he can start making contributions again. So the Able program has 7 investment options, 6 asset allocation options, and a checking account option, which we'll talk about the checking on the next slide. You can direct your investments into one of these or a combination of all 7 if you'd like. You can see on this slide the 6 asset allocation options, and you can see that they range from aggressive to conservative, and they are firms that you've probably heard of, mixture of different firms such as Vanguard, Sallie Mae, BlackRock. Also note that the chart that each option has an asset-based fee. This is shown as an annual percent, but it's actually taken out of the account on a returns daily. So you can move your funds among these options twice a calendar year, according to federal law. You can find more information about these on our frequently asked question page on our website. You can also click on each option that you see and kind of delve more into that to see what the fund is made up of, the components, and the fee structure more in depthly there. So now we're going to look briefly at the checking option because it's pretty popular. The Able account checking is offered by Fifth Third Bank. Now I know none of them are really around here, but bear with me here. So the account owners enroll in an Able checking account on our website or paper application, just like they would any other investment option. The checking account is FDIC insured, And you can have up to $250,000 limit when it comes to a free debit card. Now, obviously with the $15,000 per year limit, it'll take you a little while to get to that $250,000, but you could get there. Using your card at ATMs are free if they're in network. So very similar to your normal checking card. Free if it's in network, $2.75 out of network charge. So that's where we don't have the Fifth Third Bank here in Pennsylvania, too many of them. So typically it would cost $2.75 every time you take money out of the account. So keep that in mind. The daily ATM limit is limited to $800 across the board, and the point of sale is $5,000. You can have these lowered or increased by calling the Fifth Third Bank directly, and you can do everything directly with them. You can order checks if you'd like. There is a fee for $6 for 25 checks, kind of like your normal bank account. If you want some checks, you have to pay for the book. It's $6 for 25 of those checks. If you choose the checking option, there's a $2 per month fee associated with the checking account. This fee is completely waived if you choose to have your statements and profile confirmation sent electronically. And if you have an of $2 or more. So it's kind of that what every bank is doing, where you go green. If you suppress all your mailings and have that come electronically to you, then that fee will be waived for you. And what's nice with these accounts is that there's no overdraft or return payment fees. I know who I bank with, there's quite a hefty overdraft charge that we just actually, my husband and I did, but that's another story for another day. But you can absolutely have understanding or have a little bit of breathing room knowing that those are not counted at all. So this slide is going to show you the fees just so that we're very transparent, letting you know exactly what's going on. There is an account maintenance fee that applies regardless of the option. So that is for everybody. And the fee is $5 per month if you receive information by mail, and it's lowered to $3.75 if you receive the money electronically. So again, you can lower that to $3.75. We already mentioned that the asset-based fees in the investment portfolios and the account fees on that last slide. So again, you can look at the website and kind of dive into that and look at the fee structure a little bit more detailed, because it really is individualized based on which options you select. So once you put your money in, how are you going to use it? So even if you don't have a checking account option, you can make withdrawals from your investment option by logging into your account, by calling our customer service line, and writing or filling out a form that you can obtain online too. If you have the checking account, you can do some extra flexibility when you withdraw by using your debit card at a store, withdrawing in an ATM cash, or by writing a check for those purchase checks. So that just allows a little bit of flexibility using the checking account versus the card. So what can we use all of these things for? Now that's what everyone's waiting to hear. Okay, I have all this money saved. Now what can I use it for? The quick answer, everything. It is your money and you can use it for whatever you want. But if you want to enjoy the benefits of and protections of the ABLE law that was created, then it needs to be used for qualified disability expenses, which you can see here. They have 11 categories given. The federal law listed 11 categories, and those include things like education, transportation, prevention and wellness. And the proposed IRS regulation also lists basic living expenses. They also note that they're not limited to expenses that are medically necessary, nor do they need to be for the sole benefit of the person with the disability. So for example, if a computer needed to be purchased, it would be qualified, even if other members in the household would utilize that computer. If you're traveling out of state, for example, I had somebody in my last presentation, they said, what if I wanted to go to Disney World? You can absolutely go to Disney World and you need a caretaker to go with you. That would qualify because that caretaker is necessary for that individual to be able to go to that account. So it is really flexible in that it allows you to use. But the bottom line comes down to the qualified disability expenses are very broad. It's up to the account owner to make that decision whether it's qualified or not. The best thing to do is always keep a receipt of your purchases just for record. We here at Treasury do not need a copy of that. We'll never ask for that. But in case the IRS audits you, then you will need to, of course, prove that, and then that'll help you out in the long run, and then you won't pay anything that you do not need. So if something is qualified expense and the IRS does not spell it out electronically, like say an electric wheelchair, they're always qualified. Hearing aids are never qualified because what you need and what I say might not be quite different, if that makes sense. So just if the thing is necessary for the betterment of the life of the person with the disability, then you can use it and it would be qualified. So first, tax consequences. This is where it gets a little confusing because we talk about non-qualified expenses. It's very seldom that you will have even non-qualified expenses because everything pretty much falls in one of those 11 categories or falls within that basic living expenses. So the first is tax consequences. Withdrawals used to pay for qualified disability expenses incur no federal or state taxes. Withdrawals used for non-qualified expenses. So if you came out and said, this is not a qualified expense, or you were deemed what your expense was, then the earning portion is taxed at your federal tax level. And there's also a 10% federal penalty. Then there is also Pennsylvania income tax that is owed on those earnings as well. Again, that's earnings only, and that's very rarely occurs because typically what you're using this money for falls within one of those 11 or 12 categories, if you will. The second is the consequences for federal means tested benefits. Withdrawals for non-qualified expenses will be counted in determining your eligibility. So this is particularly important for SSI recipients. If you make a non-qualified withdrawal and they don't use the money in the same month as it is withdrawn, it can affect your SSI benefits. So basically, who gets to decide whether the expense is qualified or not qualified? That's up to the account owner. However, the judgment may be subject to an after the fact review, again, through an audit through the IRS, but it's up to the account owner. The main point I want to point out here is that the SSI recipients, you want to make sure that you withdraw the money and use it within the same month. And we're going to get into SSI things here in a minute in a few slides here, or on this slide. So now I'm going to talk about these rules that apply for people receiving SSI benefits. I thought it was a few slides later. Please forgive me on that one. So SSI benefits would be suspended if you go over that $100,000 threshold, but they will not be terminated. The person would not have to reapply, and this does not impact medical assistance. So your Medicaid would still be there. Contributions directly into an ABLE account do not affect the SSI benefits at all. And SSI recipients are required to tell the SSA anything that would impact their benefits. So if you are receiving more money going into the account over that $100,000 threshold, technically you're supposed to go and let them know that information. The state ABLE agency, which is us here in Treasury, is required to report to SSA monthly on every ABLE account. So we have to send in a monthly kind of data sheet of all the ABLE accounts and what is happening. So that's the account balances and every withdrawal. So that's where you could potentially be audited, but again, it is seldom. We haven't seen much of that. And if you are, typically the person is able to prove this was a qualified expense. Now, housing. So housing is a qualified disability expense. However, for people in SSI, you need to pay close attention to your timing during this. So if you use the money in the same calendar month to pay rent, that will not affect your benefits. But if you take money in 1 month to pay rent for the different month, then it can affect your SSI benefits. So let's say I took money today to pay for June's rent. You would have to take money today to use for May's rent. Once June 1st hits, then you'd be able to take that request and use for the June month, which I know it's a bit confusing because a lot of people, I know like a lot of rent is due on the 1st of the month. Well, you'll kind of have to pay that a little late. But if you let your landlord know that it's coming through an agency, it will get paid within that same month. It's just in order to receive your benefits, you need it to be that way. They shouldn't have any problem with that. Non-qualified withdrawals are similar as long as the money is withdrawn in the same month. So there's no impact on your SSI benefits. But there are still the tax consequences that I just mentioned. So for SSI purposes, housing expenses are even broader than just rent or your mortgage. They include things such as heating, sewer costs, garbage disposal or garbage removal, So you want to keep this in mind when you receive SSI, that if you're helping somebody, if you receive SSI, or if you're helping somebody who receives SSI, you want to take the money out and use for that same month. So that's kind of the biggest trick with the ABLE accounts for SSI recipients. Pennsylvania is more generous than many states because we do not take a claim against the account while the person is alive. But after the person passes and the ABLE account merges with all the other assets to create the estate, like a house or a car, then DHS can make a claim, just like they would if the person didn't have an ABLE account. So that's across the board for anybody. The person isn't penalized for having an ABLE account at all. It's just that the after fact, there may be some fees or there may be some claims filed against. So all outstanding disability expenses are paid first before the DHS can make these claims. And DHS is Department of Human Services, which I'm sure you're all aware, but just kind of wanted to spell that out for you. So this includes your medical and burial expenses, legal fees. So you would pay all of that out of the ABLE account prior to it becoming an asset. I'm sorry about that. I'm sorry about that. So then we also have Pennsylvania is more generous than many states because of the limitation claims to only funds spent after the person turns 55 years of age or older. If somebody started receiving benefits in kindergarten and they passed away at age 53, this state wouldn't make a claim against their estate. But if that same person passed away at the age of 56, so prior to over the age of 55, so if that same person passed at age 56, the state could make a claim against their estate, but only to seek repayment for services provided after the age of 55, and only funds spent for nursing facility services, home and community-based services, related hospital and prescription drug services. Repayment is postponed if there is a surviving spouse, a child under the age of 21, or a child of any age who also is blind or disabled as well. So I'm going to show you the outreach page, basically what you see when you go to our website. It's a great place to find a lot of ABLE resources, and we're going to talk about exactly what you see on each page. So from the general outreach page, you can request ABLE materials or webinars specifically for your staff or a support group. You can find messages and graphics for your newsletter or social media, sign up for email dates and dates for upcoming webinars, view webinar slides, see account owner stories, see their kind of pros and cons, and print out forms such as payroll deductions. Now I'm going to show you just kind of a little bit more in depth what it looks like when you're actually applying. So it's easy to enroll. You just do that at paable.gov. An individual can have one ABLE account nationwide. And there is, so they can have one of those ABLE accounts online. And there are several benefits exclusive to PA ABLE account holders. The account can only be opened for an eligible individual. And the PA ABLE plan disclosure statements, which is available online and in our enrollment kit, contains important information about the ABLE accounts, including the objectives, risks, charge, expenses, and restrictions. So you just want to pay attention to the disclosures as well there. So first, what you're going to do is put in the information about the account owner. If you're opening the account, just make sure that you're putting the information for your son, who's like a teenager or that person, because they are the account owner, but your email and your phone number because you're the one managing the account. Next, you're going to put the information about who is filling out the information, who's filling out the information. So this is the account owner filling out the information, or is it the account owner's parent or guardian? If the authorized individual is opening the account, parent, guardian, power of attorney, or the rep payee, then the account authorized individual must include the appropriate authorizing documentation. So this could be the birth certificate, guardianship, court documents, or other legal documents. And this is to verify, to authorize to open the account and maintain the account on the behalf of the account owner. The enrollment form asks for an overview of the disability type. You don't have to get too stressed about this information. They're just going to, you just need to check a box as to which type of disability you have. This is just the federal government collecting basic information on who is opening ABLE accounts. It is mostly people with nervous disabilities or mostly people with psychiatric disabilities or intellectual disabilities. They're kind of just trying to collect data on that. It asks the basics underneath the ABLE eligibility is asserted. Does the person receive SSI or SSDI, or are they self-certifying? Then the identification part, the account owner or fiduciary must provide a valid driver's license or another valid ID card, such as SSDI card, Medicaid card, or insurance card. Here you can see the 7 investment options that you can choose from. You can click on all of these again to find out more information and to see what it is made up of. And you can invest in just one of these or a combination of all 7. The percent just needs to add up to 100 down in the total, and then you're set to go. So this is asking how you'd like to fund the account. Do you want to put money in now and then contribute monthly or regularly from a bank account or paycheck? If you choose banking account options, you'll need your routing number and account number. And if you choose, you'll choose what date and how frequently you want to make those contributions. This page is just showing exactly how you want to receive the information. So again, remember, if you receive it electronically, your fee structure will be lowered than if you receive that via regular mail. And these little radio buttons are automated to the best setting to lower the fees. So those do come directly for those. So those do set directly for to notify by email instead of mail. So you want to make sure that you're standing in the same thing. You will create a username and password, and you'll choose an image. You'll have security questions that you have in order to make security onto your accounts. It's similar to applying for any kind of bank account or credit account or credit card. This is just kind of letting you know that this presentation was just a highlight of what is going on. It's not necessarily all the information. We encourage you to read the disclosure statement and find out everything you need to know about the program. And then this is just if you have any questions, I can take those at this time. I'm sure some have come in. And if you can always contact us at our number, our call center, 8 to 5, Monday through Friday. Number is 855-529-ABLE or 2253. Or you can always email us at info@paable.gov. So I'm going to go ahead and leave that up for you. And then if there are any questions, I know, Allison, I'm sure some have come in, so I can go ahead and help you with that.
Yeah, the first question is, I didn't see an option of rolling over a PA 529. How is that done?
So there is actually, you would create an ABLE account. Once an ABLE account is established, there's a rollover form. So you would create that rollover form where you're putting information about the 529. And what that allows us to do is request that information from the 529 plan so you don't have to do anything. You just have to complete a form.
Okay, well, that was the only question.
Wow.
I know a lot of people submitted questions in advance. So if anybody has any more questions, feel free to type it in the chat. I know this is a lot of information.
Allison, this is Marta Fox. I typed a question to Kelly directly and not to everyone. Did you get that, Kelly?
I did not see it, but let me take a look here. What was your question? I'm not seeing it.
Okay,
but...
my question was, my son Michael is 26. He no longer gets like technically SSI. His father is 71 and his father is a high earner, and he started collecting Social Security. His father started collecting Social Security on his record. So as a result, my son Michael gets Social Security based on his father's record. So it is quite a substantially higher amount than the $750 that most people get. So
Okay.
is that considered SSI, or how does that impact his ability to get an ABLE account with that excess money?
That wouldn't be a problem at all. There's not income restrictions at all. That's where the self-certification would come into play. So you have the SSI, and you also have the SSDI. You can be eligible to receive them. You don't necessarily have to receive them. Or for those people that don't fall within one of those two perimeters, then you can do the self-certification. So you can self-certify that there is a disability, and then you'd be perfectly able to open an ABLE account.
Okay, great. Thank you.
Yes, thank you. Sorry, I couldn't see your question.
There's another question in the chat. I have an ABLE account, but my daughter is turning 18 this year. What changes are needed to the account?
Nothing. As long as you have an account for the individual, if they're able to contract or if they're not able to contract, that's really the big question. If they're able to contract, then you can change the name of the account owner, or you can change that around, but really nothing needs to change. If you want it to change, then it can. There's not limitations to if you're 18 or older that you have to be the account owner. It's just simply you have that ability to.
Okay, I'll just follow on with the question. So I mean, she's not gonna be able to contract, and assumingly when you say contract, she has the wherewithal to understand what she's signing and things like that.
Correct.
If I'm correct, understanding what that means. Yeah, she is autistic, she is functional, but obviously she's also, what we call MR, or intellectually delayed, that she is not going to be able to even understand what that means. So we actually are going to go out and become guardianship for her, put in to be her legal guardians after she's 18, so we can handle all the medical stuff as well. So there's nothing that we would have to change with respect to this account because of that?
No, there's nothing you would have to change at all. If you're still the person that's going to be helping make the decisions and kind of in charge, then there's no changes at all. Okay.
We've had the account actually probably since 2017 or so.
Great.
Now the question, we also got a Schedule K. It was sent to me, the account owner's name, and I don't really know if there was any tax thing we had to do under her name at all.
That I don't know. And we advise kind of talking with somebody like a financial advisor or whomever files your taxes, just to kind of get clarification on that, because there are different situations. But for the most part, we have to by law tell everybody, or we have to report to SSA everything with the accounts every month. So account balances, account withdrawals, deposits made into the account. So all of that could trigger that form being sent out to you, but that's between SSA and IRS. If you get audited, then that would come into play. But as far as us here at Treasury, we don't need anything or anything along those lines.
Yeah, no, I understand that. I was just trying to figure out on the tax side. I mean, I don't even know. I was kind of surprised to get a Schedule K because I really wasn't sure what to do with it, to be honest with you.
Sure. Yeah. I mean, Department of Revenue might be able to help you with that in order with the tax prep and things.
I have a few questions.
Sure.
One, since we are guardians of our son, are we opening the ABLE account in his name, or is it, since we're court-appointed guardians, is it in our name for him since we're his guardians?
Sure. So the account owner is always the individual with the disability.
Okay. Secondly, since we have set up a revocable supplemental needs trust, can an ABLE account be set up in the name of the revocable supplemental needs trust, or must it be in the name of the individual?
I don't know the rules of the trusts and how that falls into play. I believe it has to be, and I could be wrong on this, but I believe trusts have to be named in the individual's name.
And then my last question is, is the Pennsylvania Department of Revenue actually investing and holding these accounts? Are we actually sending the $15,000 to the Pennsylvania Department of Revenue to open these accounts, or are these being done by various financial institutions?
So no, they are coming directly to Pennsylvania Treasury. Everything's coming directly to Treasury. It's just that we have investment partners, like who we invest with would be Sallie Mae, BlackRock, Vanguard. So that's kind of our investment options. It's similar to our 529 plan, which is run through Vanguard. We house it here in Treasury. It's just the investment options that are offered are through those companies.
Okay, so I misrepresented myself. I have one more question. So
Sure, absolutely.
no matter who the funding, whoever is providing the money, it's still in the name of the disabled individual.
Correct. Correct.
Okay, thank you.
You're welcome.
Oh, okay, there's one other. And I sent this into earlier. My recollection is when we filled out the SNAP application, I'm pretty sure there was a question asking whether or not our child had an ABLE account. And I didn't understand why there would have been a question if he had an ABLE account, if this wasn't supposed to be relevant towards his needs.
I thank you for sending that question in, because I had no idea, and I had to kind of send it up the ranks earlier today when Allison sent that over to me. And what our director believes, it should have no impact at all. It's simply to get information, kind of like when they're asking for what type of disability, just for informative reasons, do we have more people with psychiatric disabilities applying, or more physical impairments, just kind of statistically speaking, inquires about that. But it really, there's no impact at all with the ABLE program and SNAP programs. That it doesn't matter at all. So I would think, and that's what I've been told by all my supervisors and directors, that the only reason that they would ask that is simply for information. It's not going to impact your ability to get one or not get one.
Okay, thank you.
You're welcome. Thank you. Good question. I never got that one.
We have a couple more questions in the chat. Someone asks, can we pay ourselves as a caregiver?
As long as it's that's the general rule, as long as it's in the benefit for this person with the disability. So if they need the help and need the assistance, then technically, yes, you could be paid directly from there.
The next question is one that I am very curious about. How long do we need to keep receipts?
So the receipt thing, it gets a little tricky because no one is really going to ask for receipts unless you get audited in the kind of afterthought. So, I mean, I don't know how long to save to use for receipts. I would just say if they're large purchases, keep those receipts for a few years. So if there's like a wheelchair or a ramp installation, if there is a car, a certain type of car, I would keep those receipts for a few years, just because I know the auditing process they're typically a little slower getting to that. But your everyday living expenses, things like that, once you get your tax return back or your tax information, you don't need to keep that much longer than that. But I mean, that's really personal preference. If you want to keep that for further background or not, we here at Treasury are never going to ask for that. The only people that would ask is if you get audited by IRS.
Okay. Thank you for that answer. I was going to ask it if someone hadn't typed it in. Are there any other questions from participants? Feel free to jump in.
This is Marta again. Sorry, it would take a while to type. So Kelly, you did mention that you can take your child on trips, and as the the parent can be the caregiver on the trip, so they can get reimbursed for what, if it's a plane trip, if there's a hotel involved, if there are meals involved, is that reimbursable, all of those? Or are the meals kind of sketchy because that's a social, an SSI kind of thing.
That's where it really gets into where the account owner or the caregiver taking kind of like your own thought process. Like for basic living expenses for one of those 11 categories, if it falls within any of those, then you can use it, the embetterment of the individual. So being that the individual may need to have a caretaker with them, so in order to take them with, then those expenses you mentioned, such as food, housing, transportation, those would all be counted. Absolutely.
Thank you.
You're welcome.
Anybody else? Last call.
Hi, this is Eileen Kisloff. I actually have a question. I didn't quite understand when you were talking about what happens to the account at a person's death. I was confused about that. Does that money that's in the account revert then back to the state the way the irrevocable trusts do, or I'm not sure. I didn't quite understand how that worked.
Okay, so basically, if a person passes away after the age of 55, then the money can be utilized, the money would be utilized to pay any outstanding expenses. So if there was any, let me go actually to that page just to kind of better explain that. Sorry about the flipping. I know your eyes are probably. So here we go. So the federal Medicaid law requires the state agency to reseek that money after the person passes. So if those expenses would occur, nursing facility services, home and community-based services, related hospital and prescription drug. So if they come for those, then those would be paid out. Anything after that would then be turned over to the estate, which could then face those tax penalty, or not penalties, those taxes. So all the money would be used first in the ABLE account, then it would be transferred over to be part of the estate.
Okay, all right. Well, thank you.
You're welcome. Thank you.
Anybody else? Jump in or type in. Well, that might be it for now. A lot of really good questions and a lot of information to absorb. Kelly, I want to thank you so much, and the Pennsylvania Treasury Department for giving us this time and explaining a very complicated but important program. Yes. I also want to thank Captions Unlimited for supplying a captioner for our program. And I want to thank all of you for participating and asking some really insightful questions. I will be sending out a survey to you all after the program. And if part of the survey asks about future programs, if there's things you're interested or would like to learn more about, I would really like to plan some future programs that are timely and interesting to this group in particular. So I just want to thank you for taking time out of your day. Thank you, Kelly, again.
Thank you, Kelly,
this was
and
great.
thank you, JRS.
Yes, thank you,
very much.
Allison, and thank you everyone for participating today. Great
Thank you, everybody.
questions.
Thank you.
Thank you. I will also follow up with the link
Have
to
this
the program
presentation emailed?
afterwards.
Oh,
I do have your slides, Kelly. Can I send them?
Oh, absolutely. Absolutely.
Okay. I will send out the slides
We can
great.
shortly.
we can also
Yeah, 'cause
email
actually
out
my-
the recording.
Yeah.
Yeah, because my wife was not able to make it, so I'd like to be able to go through this with her.
And we do on paable.gov website, there are webinars that you can sign up that we have like every month. I know one is coming, I believe next on the 18th that I'm doing again, and there'll be American Sign Language person there signing as well. So a lot of information that we're doing, trying to get this information out to everyone. So we'll always do that as well.
Thank you again.
Thank you.
Thank you, everyone. Good night.
Thank you, everybody.
Thank you.